What's up YouTube? Dougie Chong here. Welcome to today's episode where I'm going to be talking about Facebook stock. In addition to Facebook stock, I'm just going to talk about the market conditions in general because just so much has happened in just the past little while. I've just been a little bit busy, but don't worry, I didn't do something crazy like sell out of the market completely. Some YouTubers, such as Meet Kevin, did employ this strategy and made quite a bit of money by timing the market, but that's just something that I did not do. So in this video, I'll talk about where I think the market is heading and why I think, spoiler alert, Facebook is a buy in my opinion. Again, I'm just some guy on YouTube. This is not legal financial advice. Alright, so first of all, lots of things are going on in the market right now. From the war over in Europe to interest rates rising and COVID easing. We'll look at each of these factors and see how they could affect the market. The war in Ukraine is one of the biggest and most tragic events. While it has tons of political ramifications, I'm going to go over some of the main financial ones. The most obvious financial issue is the Russian sanctions, which effectively try to separate Russia from the rest of the global financial system. Some of you might be wondering how cutting off a country so far away such as Russia would affect something like the Canadian or American economies, but without going into too much detail, our global financial system has evolved so much that taking out any one of the main international financial superpowers really affects the others. The other less obvious effect of the war is all the aid money that is going to Ukraine, and rightfully so. But all this money is coming from somewhere and it's likely being printed, which will lead to higher inflation when inflation is already at a pretty high level. This leads into my second point of interest rates rising. The Bank of Canada raised their overnight rate just the smallest of margins to 0.25% back in March. This is meant to cool down the red hot real estate market here in Canada and in general tame the overall inflation that we have been seeing. I don't think anyone was surprised to see such high rates of inflation, especially since interest rates were so cheap and tons of money was being printed. So the question is, should you remain invested in the market in times of high inflation? In my opinion, I would say yes, because your dollar is being devalued quite a lot more when it is just in a savings account or even worse, a checking account. The last overall market trend is that COVID is finally starting to ease. Say finally, it's happened a few times and then the economy shut back down, but now it looks like things are really starting to sort of go back to normal. This should be good for businesses in general, and consumers have a lot more pent-up demand to spend their disposable income. So with all these positive factors, why are lots of analysts and other YouTubers calling for a bubble, calling for the top, and seeing a market crash coming imminently? While it's true we're down maybe 10% from all-time highs when looking at the S&P 500, we were due for a correction due to the insane bull run last year. The S&P 500 index went up something crazy like 25%, and really it's been going up for quite some time, and a correction was due. And a lot of other small, not really profitable companies took even bigger hits like 50 or 60% hits just because a lot of investors were too exuberant. They were just buying into any company and not really looking at their profit margins. So overall, the market could very well dip more, but like I try to stress on this channel, don't try to time the market, just continue to invest consistently, and overall your returns will increase as long as you're investing in safe, reliable companies. Now let's look at why I think Facebook or Meta stock is a good buy in particular right now. Facebook is an interesting company, always looking for the next big thing. They recently tried to launch their own crypto coin, which got shut down due to regulation problems. Since then, their new #1 project is the metaverse, which is a virtual reality. They already purchased Oculus a few years ago, and what started off as a novelty for video games has become a core focus of their business for the future. And Facebook will definitely need to find another way to make money as regulators are cracking down on how they use customers' data to make money. Overall, the company is expanding well with fights with Apple for top tech talent. Also, since the company is down something like 40% from its recent all-time high, I think now is a good time to buy. It's very rare to see such a large drop from one of the biggest tech companies, and its fundamentals are also very solid with a PE ratio of around 16. That's why I think, in my opinion, Facebook is a good stock to buy right now. Let me know in the comments below what you think, or if you think another stock is pretty good to buy right now. Also, let me know, what do you guys think about the market? Do you think we're at the top of the bubble, the middle, or have we actually hit a bottom finally? That's it for this video, guys. Thanks a lot for watching. I hope you enjoyed it. Don't forget to hit that like and subscribe if you have not already. Enjoy the rest of your day and see you in the next video.